Thanks for joining us. I'm Marlin Bohling with a look at our markets. Let's dive right into our quotes on the corn market right now. On that December contract, we are just 3/4 cent higher at 385.5. Remember, we opened about a penny and a half higher. On the soybean side, well, even though we had overnight export sales reported again, we're down 2.5 at 913 3/4 on the November. How about on the wheat? What's it doing? Well, in Chicago, we have December down 1/4 cent now at 490 1/4. Kansas City, December this morning, is now trading a half higher at 404.5. And Minneapolis, December, currently 3 3/4 higher at 539 3/4. Joining us in studio, Chris Swift of Swift Trading Incorporated here in Nashville. Thanks for coming in.
Yes, sir. Good morning.
All right. So we had overnight sales, 198,000 tons of soybeans to China and another, 240,000 tons to unknown destinations. Right. Cold temperatures,
frost,
snow
freeze,
coming in,
everything.
all kinds of tempest, trade talks, and we're taking beans
lower
down
on the
3
day.
cents. What?
I have no idea. I don't. There's just no way to calculate how you can come up with that much issues still with a crop that's mostly in the ground and still not have any kind of price movement to it.
Do you foresee any kind of a crop degradation in quality, maybe loss of yield from that cold weather?
I think we've had a poor crop all year long. USDA has showed that the numbers for the good to excellent category have never equaled last year's. We have a WASDE report on Thursday, and then we have Chinese and U.S. negotiations later on this week. So maybe traders are just a little bit apprehensive of doing anything before more information is found out.
There's always a big debate as to whether USDA will be that bold to go out there on that limb and change those yield estimates very much. What do you think?
Well, especially because we don't have any harvest data. That's the one thing that we don't have is as much harvest data to go by. And most of the harvest data here in the South has been for corn. It's probably been pretty good so far in the South, but it's not until you get into the North where we begin to see some issues.
Okay. We're going to come back in a moment and analyze our livestock trade, too, and lots of stuff going on there. We're talking with Chris Swift. He's of Swift Trading Incorporated in Nashville, and we're going to be talking cattle and hogs next. We are back talking with Chris Swift of Swift Trading Incorporated in Nashville. He's in studio right now, and we're talking about the markets. So let's go ahead and take a look at our live cattle futures.
All right.
Feeder cattle. Live cattle kind of perking up. Let's take a look. Well, look at the nearbys. We have October now 55 higher at 107.90. December 17 higher. We're at 110.95. And then if you get into the far out deferred months for next spring and summer, they're a little bit weaker, about 10 to 15 cents. If you look at the feeder cattle market this morning, we currently have the November contract down 13 at 141.25. And January down 40 cents at 137.28, make it 42 lower right now. The most pressure is in the defers. If you look at lean hogs, now remember, lean hogs opened under quite a bit of pressure this morning, and they're adding to it now, Chris. We have December lean hogs down 283 at 64.42, and it looks like they may have actually touched the limit down there at one point already. If you look at the low, we have February down 265 at 71.83. So here again, we have that same question like we did on the soybean side. Now we have the lean hogs with a trade team in town in the country as of Thursday.
Right.
And everybody's expecting a big pork purchase.
It's one of the greatest.
And we're going down.
Yeah, it's one of the greatest discrepancies I've ever seen between those that have and those that have not. And the U.S. is just apparently swimming in pork, and all the rest of the Asian countries having massive deficits out there. And I know that the Chinese government has been producing subsidies for their consumers out there and been trying to source pork from every place under the sun that they can to be able to keep prices, relatively stable, which hasn't been very good, as best I've heard.
Now, I know you track the cash cattle trade a lot, the feeder cattle market. What's going on there anyway? We had the higher cash cattle trade late last week. What is it, $5 over what we had the week before? And yet we can't translate into that into higher futures?
Right. The fat market is pretty much just converged basis. That's all it did. We had some massive basis swings when we got the fire from the Lenny County Tyson plant there, and we had some big movement coming into the fall of the year. There is a large discrepancy between the number of cattle placed this year versus the cattle placed marketed last year. So we're looking for where that discrepancy is. And a lot of people think that due to that price disruption that we had, there's still more cattle outside of the feed yards right now and still yet to come in for the remainder of this year.
Well, thanks for the analysis today, and I'm glad you had a chance to come in and talk with us.
Absolutely.
Appreciate that very much.
Yes,
I look
sir.
forward to next week, too.
All right.
Chris Swift. He happens to be with Swift Trading Incorporated. He is based right here in Nashville, and we'll be back in just a moment. We'll have more of your Market Day Report coming up right after these messages.